there, welcome to the Trading Bell. My name is Maalika, Kazia. I'm glad you could make some time for us. Today, as you can see, I'm actually at the headquarters of HF Group, and I'm going to be talking to Group CEO Robert Kibaara. Now, when we talk about HF Group that has been in existence since 1965, we think of them as providing property and financial solutions with interests ranging from commercial banking to real estate to insurance and more. So we want to get into this conversation with Mr. Kibaara on commercial banking, affordable housing, real estate, and of course, where is HF Group going? So let's get right into it. But before that, you want to find out more about him. So take a look at his profile as I go inside. Robert Kibaara is a renowned banker with over 25 years experience and an excellent record of accomplishment in successfully driving change, revenue mobilization, and delivering outstanding business results. He has previously held several leadership positions, including Retail Director at NIC Bank, Executive Director for Retail and Business Banking at National Bank of Kenya, General Manager for Integrated Distribution for Southern Africa, and General Manager for Personal Banking and New Business at Standard Chartered Bank, among other executive positions at Barclays Bank of Kenya. Robert also serves as a director of the Kenya Mortgage Refinance Company. He holds a bachelor's degree in banking and finance from the University of Sunderland in the UK and a postgraduate diploma from the Chartered Institute of Marketing, CIM, UK. All right, thank you so much for joining me today.
Thank you for having me.
Okay, so when we talk about the HF Group, and of course you've been at the helm for over a year now, roughly, right? We've seen that the losses have decreased over the past years. We've seen 2018 Q3, that loss of 322 million pre-tax. If we compare it to Q3 2019 at 81 million, we have seen that there's consistent improvement in the numbers. What has been the strategy so far? What are you expecting in this year, in terms of continuing this momentum and your strategy really to keep pushing that further?
Okay. First of all, thank you very much for having me. And the best way to look at that is to look at where we're coming from as an organization. In 2018, we had a difficult year. We had losses over 600 million. Then 2019, we came up with a strategy to turn around the organization. And you're right, I've been here for about a year now. So what we've done over the last year, first of all, is that we got into this massive collections effort to just make sure that we actually cure the non-performing loan book that we had. And 2019, we actually collected 3 billion shillings from that entire loan book. Obviously, that helped a lot to just get cash to the bank and to be able to do other things such as lending and such. The second thing is that we actually built other businesses, what we call engines of growth. So for instance, now we have got SME banking, we have personal banking, we have diaspora banking, we have institutional banking, and these businesses have started bringing in income. If you look at our last year performance, even as at Q3, in terms of non-funded income, we had actually doubled our income. And also we also worked on the organization of our balance sheet to just make sure that our cost, especially the cost on the funding side, has significantly reduced. Last year, we paid out close to 6 billion shillings to the different lenders, including the bond. And obviously, that brought in a lot of savings, including also the efficiency, just improving efficiency, our cost to serve. And we saw that improve every month last year, until such a time when we are saying now, we are not worried about the problems of the past anymore. We are actually thinking about the future now.
So it's clearly been a very strong, bounce back under your leadership. If we look at one of the recent developments as of Jan, we saw that the Housing Finance Development and Investment Limited section was pretty much set to be dissolved. You said that you'll finish the current projects and then not take on further, right? So what really was the biggest factor influencing that particular decision? Okay,
efficiency. Efficiency is the word. If you look at what we are doing on the HFDI side, just to give a bit of background, HFC and HFDI are two subsidiaries of the same organization, HF Group. but you find that HFC built houses, unsold houses, and also does mortgages. HFDI builds houses and sells houses. And if you look at that, you get a sense that there is actually quite a bit of duplication. So you've got these subsidiaries doing a lot of the same. So what we have done is actually then to move assets, certain assets and liabilities of HFDI to HFC, and on that basis also we have moved the operations, the business operations of HFDI to HFC. HFDI will not die, it will actually continue to be there, but the day-to-day operations of it move or have been merged to HFC. That means several things. We've had a lot of capital sitting on HFDI that is primarily idle, that is actually idle. So what we are doing is then we are going to, that capital we can use it a lot on the HFC side, which is the bank side. And then we create now one uniform unit that actually does what both were doing. But we've also said that we are not going to start to do construction projects ourselves as an organization. We are going to focus on building partnerships with the organizations and institutions that are actually developing those houses, and we are going to focus more on the banking side of things, which we are really, really good at. So that's essentially the change that means. So efficiency, capital optimization, and also just making sure that we do what we are really best equipped to do.
So that's interesting, a lot to unpack there. So before I even get to the affordable housing, topic that I really want to ask you about, you've talked about banking, of course, being the focus. We talk about digitization, and we've seen recently, over the past 2 years or so, that a lot of banks are coming together and forming one larger unit, as we've seen, so that there's that sort of strength that's acquired when you're two. Where do you see that trend, how does it influence the space? And also with the digitization wave, what are you doing to make sure that you're leveraging on that to be on top?
Okay, so first of all, to answer your first question, yes, you are going to see a lot more of that, businesses coming together to build bigger businesses. We don't have immediate plans to do that ourselves. We believe that there is a lot of work we need to do to get ourselves better. We have got a lot of room to be much more efficient and consolidate our businesses so that, first of all, internally we are actually fit for growth. That's the first thing. But turning now to the digital conversation, that will continue to power growth both in the industry and also within HF. If you look at the approach we have taken, we are calling it digital first. Digital first means that all the solutions that we are building are actually, we build the digital version of it first, and then the analog version, if we have to.
Okay.
And that's how we have come with solutions such as WhatsApp banking. We've got Whiz, which is award-winning. We've got now online banking. We are very active on bots in terms of communications to customers, and even on social media. That will continue to grow. How we see it from where we sit is that there's got about three angles. The first angle is the angle of service. How do you make sure that customers can be able to access products faster, more efficiently? They can be able to self-help themselves. That whole access. And so we are creating opportunities for customers to access the bank wherever they are. And we believe we are leading that space. The second thing that we are doing is to make sure that, for instance, you are able to then not only just provide that service or that service, but also the user experience. That the customer can actually, with the ease of doing business, that you can actually do that in two clicks, and you're able to access your service. For instance, today, you can be able to send an RTGS from here to to another bank in like three clicks, and that's done. You can be able to access services. For instance, you can be able to do what else? On the WhatsApp banking, then just as you are chatting, you don't have to leave WhatsApp banking, you can actually be able to access it. That user experience is very, very important to us. The final one is communication. That customers can be able to contact us anywhere easily, whether you're on Instagram or WhatsApp or Facebook, any of the channels, on social media channels, you can actually be able to access us. And we have online real-time conversations with customers. That will continue to get better and better. the one thing that we've done very, very well that has improved things here, you know, at HF is we have digitized a lot of the processes we have. HF has got about 54 processes, 54 journeys. You know, order a checkbook, order standing order, you know, a card. We have got about 54 of those, and we have digitized the half. And this year we expect to digitize the other half, such that wherever you are, you can access the bank fully as if you are inside a branch.
That's very impressive, actually, looking at the range of things, right? So we've talked about the banking, we've talked about the real estate. Now, when we talk about the mortgage, you know, we had Housing PS Charles Hinga recently talk about the numbers and say close to 25,000 mortgages, you know, is what Kenyans have taken up. But if we compare it to the population of close to 47 million people, it's obviously there's such a gap there. Why do you think that exists to such a severe degree?
Okay, thank you for that. That's a very good question. So there are several things, and most of them are actually structural. First, one of them is that access to the houses themselves. So you've got the houses, but they are actually very, very highly priced. So if you want to buy a house worth, say, 5 million, you have to go very, very far to find it. And so the cost of the house itself is a deterrent, not just because of the price, but also the location. If you're going to spend 3 hours in the morning getting to work, then you can as well just, you know, rent a house nearby.
Yes.
That's number one. The second thing is also the cost. The cost in terms of the interest rates. Interest rates have been primarily high for a mortgage, and also we've not had long-term funding, meaning that you can actually have rates fluctuating over the life of a mortgage. So if you take a 15-year mortgage, then that actually fluctuates. That, you know, obviously has discouraged many people from taking the mortgages. And also the processes, you know, both in terms of the cost, the closing cost, and just how painful it is to actually get a house. So the government has actually set up, you know, made some progress in actually solving that. For instance, Kenya Mortgage Refinance Company is going to significantly reduce that, and it's actually moving on well. In a short while, we should see that moving. That will lower the cost, and also will provide long-term funding that is actually on a fixed rate, which is very, very helpful. The second thing is that there is a lot of projects now coming up in the affordable space. There is the government ones, such as Park Road, but there is a lot of, I know about probably 10,000 houses that are coming up now in the affordable space, in projects that HF is actually collaborating with the partners. So you'll actually see the unit costs actually come down. And then institutions like ourselves are every day working on the efficiency to reduce the pain of owning a house, so that we have created now what we are calling a one-stop shop. When you come into HF, you can access the lawyers, the valuers, everyone you need to actually be able to get your house, so that process becomes easy, fast, and painless. That's really what we are doing.
Like you've mentioned, the affordable housing space, and of course we know it's part of the President's Big Four agenda. The aim of having 500,000 units, you know, done by 2022. We've seen about 228 from contractors delivered thus far, and we're seeing that a 1-bedroom will cost 1 million, 2-bedroom 2 million, 3-bedroom 5 million. Do you think we're really going to, in your opinion, of course, having been in this space, that we're going to hit that mark by 2022 of the 500,000 units?
The answer is no. The answer is no, in terms of availability of the houses themselves. What I must say is that I think that all of us underestimated how much needed to be done first of all, either from a policy point of view or just enabling, creating the right business environment to be able to operate, to actually bring to online 500,000 houses. The government, to be fair, has done quite well. Obviously, it's a difficult system. And for instance, the tax changes we saw happening in the previous finance bill, for the setup of the Kenya Mortgage Finance Company, the work that the PS Housing is actually doing to just be able to support companies that are coming into the housing space, with the obviously classification of projects as affordable housing, the tax incentives there. Eventually, you'll see actually that picking off, but the amount of background work that needed to be done before was huge, and it's still not yet done. So we are still in very early stages, but I actually expect that in the next 3-4 years, you'll begin to see now us getting into the 200,000, then 300,000, then over time we can actually be able to get there.
Okay, so considering that the current housing deficit is close to 2 million, increasing by 200,000 yearly, you know, we have to be proactive. So perhaps this foundation is, you know, supposed to, is important. So even as we talk about that, the real estate sector, you know, we've seen this, a lot of people have said it's in a slump, so to speak, over the last few years. What's your take on that, and perhaps the future of this space as well, how you see it now and what we can expect in the next couple of years?
Okay. Yeah, there are some challenges with the real estate sector, and they are not, the real estate sector is actually as a whole not in trouble. It doesn't mean that the entire sector is affected. If you look at, for instance, the affordable homes, the affordable family home ownership, there is a huge demand in that space. We see that every day. Like, for instance, HF has had projects that are within the affordable space, home ownership, and we have seen actually there is more demand that we can actually supply. But we also have now the high end of the market. The high end of the market is where real problems are. You know, the Kilimani, not even middle to high end, from Kileleshwa, Kilimani, all the way to Karen and other places. There is real challenges. Selling a house is quite difficult because the demand really isn't there. But when you come also to project finance, also some challenges there, you know, in terms of financing projects. So what we are doing at HF is that we have actually then two things. We have adjusted our focus. We are focusing now on enabling families to own homes, but in the affordable space, because there is an opportunity there for sure, and we are not doing a lot in the high end and the end. The thing I am happy about is that even previously the projects we had, the reason why we've been able to recover pretty quickly is because the projects we had were not high end. They were in places like Komarok, in Kamiti, in Dagoretti. You know, they were not expensive projects. So we have actually still been able to sell, you know, over time. But you're right, there are challenges, but in specific pockets of the real estate sector.
So we can't look at, we can't exactly, you know, take one brush and
paint
the
say
whole
everything.
thing. If we talk about certain sectors, then would you say there's a glut in specific areas whereby then there's oversupply and now they're sitting empty because people cannot afford it at this particular time? Yes,
there is a glut in some particular sub-segment of the sector, and there is also undersupply in certain segments, you know, of the sector. And then also those policy interventions by the government are also very, very helpful, because also what causes that is also that the reality also building a 5 million house anywhere near the city is difficult, you know, is difficult. So people have to go really, really far. So there is a lot of structural challenges that we need to solve before we can actually be able to solve this problem.
Okay, and away from that, if we talk about land ownership,
yeah.
How do you see the current trend? Because we've seen in the past people being very apprehensive when it comes to land ownership simply because of the legitimacy of documents, and you know, a lot of people have been burned, so to speak, with these kinds of people who are operating as if they're legitimate, but obviously they're not, in the papers and whatnot. Do you think we've come, you know, a certain way to ensuring that people who want to own land and then build a house and things like that have some sort of security from the kind of con men or women there might be out there?
Yeah. Okay. First of all, you know, that plot boom, you know, is not there anymore. Where you had all these 50 by 100s being sold by everyone everywhere.
Yeah.
And so there's, you know, the people who are still buying land are much more, you'd say, careful, and also people also have learned lessons. You know, a lot of people have lost money in this area. But what I always encourage people to do is deal with credible people. It can actually be probably sometimes expensive. If you buy a property with HF, whether a house or a plot or whatever it is, you are unlikely to lose your money. We've not had a single project demolished, you know, from the time we started building. And currently last year we had 62 projects. Not even one was demolished, you know. So there is, or had any issues. So it's good to deal with a credible organization. Otherwise, it's very hard. Even people who advertise in newspapers can be crooks, you know. It's very hard to tell who is honest and who is not.
All right, so if we talk about your strategy, you know, tell me a little bit more on the strategy that will power HF Group's growth over the next few years.
Okay. Over the next few years, HF is going to evolve into a full-service bank. We are going to still be a leader in mortgage, but we'll move a little bit off the traditional mortgage to financing of family homes in the affordable space. We will also continue to grow our engines of growth, what we're calling engines of growth within the SME space, within the personal banking space, and certain sub-segments such as diaspora. In essence, we want to be a very niche bank where we pick, say, for instance, the SME sector, and then we are focusing on just specific sub-sectors in that space. All that we will operate within what we are calling digital first, which is basically to build digital solutions within our chosen segments so that we can make it easier for customers to be able to do business with us. But essentially, besides mortgages, we will continue to build our full service bank proposition.
All right.
Yeah.
So even as we wrap up, of course, we do know that HF successfully redeemed the 3 billion shilling bond in October 2019. So just your final word for investors out there, shareholders, and what you can say to them to expect from HF Group.
Okay. First of all, we were very, very happy to have redeemed the bond. We took that money about 7 years ago, and it really, really supported the bank to grow because, you know, let's not forget that it's just 2018 that we had difficulty in the real estate sector. Part of 2018 and 2019. Otherwise, the sector was booming. And over those 5 or towards 6 years, actually HF did benefit significantly from the money that this bond. But enter the rate cap and of course the challenges within the real estate sector, that money now then became expensive for us because we were paying at 13%. Remember, we had taken it before rate cap. Before, yes. And so we were very, very eager to pay, you know, when it came to pay, and we are happy we were able to pay. And the investors actually did benefit significantly from that, from the returns that we are offering then. I think that the corporate bond market is still going to face some challenges because unfortunately there are a few companies that have not paid up, which gives it that market a bad name. But I say from a HF point of view, investors wanting to invest in HF in whatever way, we see a bright future. We have. I believe actually we are out of the woods. We have a clear vision on where we are going as an organization. We see huge opportunities in the spaces we are playing, and we can say that, you know, investing in HF is still a very good decision.
All right. Well, thank you so much for joining us, and of course
your
insights as well.
Thank you. Thank you so much. Right. Thank you so much.
Well, there you have it. CEO of HF Group, Robert Kibaara, has given us a lot of insights in this particular episode, whether we're talking about the technological developments in the banking space, and of course where he thinks that particular sector is going, as well as his insights into the affordable housing pillar of President Uhuru Kenyatta's Big Four agenda. 500,000 housing units by the year 2022. Mr. Kibaara does not think we're exactly going to make that mark, but the foundation that is being set and will be set up until that point will catapult it further in the years to come. And of course, the housing deficit that we have seen in Kenya standing at 2 million is something that is focused on a lot, not just by the government, but the private sector as well, in tandem. But aside from that, he also gave us a lot of insights into what we can expect from HF Group in the future. All this and so many more conversations, as always, happen right here on the Trading Bell. Thank you for joining me. You can keep up with us. These are the social media handles that are appearing on your screen. And as always, next time around, we'll have more insights, another guest, great information for you. So make sure you stay with us. My name is Maalika Kazia. As always, thank you for watching and keep it KTN News.